Hi, I'm Jeff Banks from MW Lomax, and this is the Banks Report.
The Banks Report, a commentary by noted property and business tax consultant Jeff Banks. Jeff is not your ordinary accountant and speaks in words and terms that you understand.
In my practice, I help people who are working hard and using property and self-employment to help them reach their financial goals. One of the questions we get asked frequently, and is particularly confusing to clients, is the difference between a repair and an improvement when it comes to the claiming of a tax deduction. Over time, normal wear and tear will mean that repairs will need to be undertaken. In the normal course of business or in the life of a rental property, these will be a tax deduction. Where the confusion sometimes arises is where the property is acquired in a poor state and then repaired to allow for a tenant to rent the property, or a catastrophe occurs which requires major expenditure to return the property to its original state. Whilst not trying to create general rules, it would stand to reason that at the end of a tenancy minor repairs had to be undertaken, or even major ones should we have had the tenant from hell, that repairs would be deductible. Major repairs may beg the question regarding insurance claims, etc. Each situation can be different, and as always, evidence is the key. Add to that, I seek to replace a corrugated iron roof with a tiled roof, and it is clear that although the corrugated iron roof may have been in disrepair, that I have clearly improved the type of roof, and as such the cost would not be a tax deduction, but rather an addition to a depreciation schedule with a deduction that comes over a period of years rather than in the year in which it was incurred. There are lots of instances where a repair can be concluded as an improvement and vice versa. It may well be worth discussing any planned expenditure with your MW Lomax client account manager to ensure that any potential tax deduction is not inhibited through incorrect assumption or evidence, especially where there is a perceived benefit past 12 months. Repairs and depreciation are probably the most misunderstood income tax deductions and where they sit in relation to your taxable income. Your client account manager at MW Lomax will be more than happy to sit down with you and discuss potential expenditure and whether or not it may be deductible as a repair, required to be added to your depreciation and claimed as a deduction over time, or worst case scenario, simply added to the cost base of the property for capital gains tax purposes. Not a client of MW Lomax? Not a problem. Simply contact us at deductions@mwlomax.com.au and one of our client account managers will be more than happy to discuss your deductions and introduce you to the MW Lomax family of experts.
The Banks Report is created by Jeff Banks of MW Lomax, a specialist financial services firm offering strategic advice and services you need in property and business, including accounting, taxation, finance, financial planning, risk insurance, superannuation, and business advisory.